discuss how do we identify a trigger point?
Well, let's put it like this. There's multiple ways to trigger into any position, right? Whether you get your confirmation and then you drop it down into a 15-minute chart to find your specific area you want to target and trigger at. What I want to talk about is the difference between triggering on a breakout versus triggering on a retracement, right? Because and a breakout that has not confirmed yet, right? That is not confirmed above its resistance channel. So the first stock I want to look at very quickly, Tim, is Apple. Apple here coming from the, I believe it's on the options report this week, correct?
Mm-hmm.
Apple here coming from the options report. Apple's trigger, when you're dealing with a bullish retracement, there's a couple different ways to trigger. Number one is you can trigger just simply, very simply put, you can trigger 10% of the ATR above the high of the day, right? That's a very simple way to trigger on a bullish retracement upon confirmation, is you just take 10% of the ATR, 10% of the ATR right now is 40 cents, 40 cents above the high of the day. Let's go, high of the day is, 170.95. So 170.95 plus my 40 cents, I'm gonna get in at 171.35. So that would put my entry to get in, and let's drop this down to a 30-minute chart. That would put my entry to get in right here above that intraday resistance level right here. The second way to do this, and probably, Tim, the better way to do it is, instead of just looking at the high of the day, drop it down into this 15-minute chart. Look at the past few days, because if I trigger at 171.35, Tim, right there, I'm triggering literally right under the tick of the high of yesterday. So you might want to drop down and look at these intraday levels to find a level that you want to get in above, and say, all right, well, maybe I don't want to trigger in above 170 above the high of the day, but I want to trigger in above the high of yesterday at 171.20, and that would put your entry at 171.60. So depending on how you want to go about it, I think the better way is to drop it down into a 30-minute chart, find that intraday level on resistance off the retracement that you're like, yeah, that's where I want to get in. That's my trigger. And the rule is, and I want everybody to write this down in the chat, guys. Everybody write this down. 10% of the ATR above whatever that is. So everybody just write 10% of the ATR.
10% of the ATR.
Okay, so that's off a retracement. So either one, you put that above the high of the day.
Real quick note, I know it's a simple thing, but we do have a lot of beginners out there. The ATR on the daily chart.
It's the ATR on the daily chart. And also, when you first add ATR, guys, it might read as Wilder's. I would recommend using the simple ATR. We all use the simple ATR, correct, T?
Yep.
So we were doing something in our scanner reports, and we were talking about something in a show one time, and I got an email just the other day and it said, hey, Matt, listen, my ATR doesn't look like your ATR. And I'm like, oh, easy. You have the Wilders. It's just subtle. It's not big deal. It's not big deal. But just make sure you're using the simple version of the ATR. So that's number one off the retracement, is you want to use 10% of the daily ATR either above the high of the day on your confirmation candle, or two, you want to make sure that you get in above that overall intraday off that slowing momentum. It's not this downward movement in price, Tim. It's the slowing momentum over the last three candles that you kind of want to look at. And that technique, you would just drop it down into like a 15 to a 30-minute chart. The next trigger that we were talking about was on Netflix. And Netflix, unlike, and this is one of my favorite triggers on a breakout, right? You have two ways to go about going in on a breakout. Number one, you wait for it to close like Spotify, right? We got Spotify here. We got Lulu here, right? You got, great breakout on Lulu. Fantastic breakout on Lulu. Fantastic breakout on Spotify. But you don't get in on the actual breakout. You get in on the second day off the breakout by putting your order 10% of the ATR above the high of the confirmation candle on the breakout. Now, that is a wonderful technique, a conservative technique into entering into it. But a lot of times we see something like Lulu and you're like, oh God, I should just put that order in above resistance.
Right.
Right. And then you have, Intel, Tim, where you're like, man, I put that order in above resistance and then it snapped back and, whipsawed me out. It's going to happen, right? You're really weighing reward versus risk and versus probability. If you wait for it to confirm on the breakout, like Lulu is, and then put that above the high of the day, 10% of the ATR above the high of the day, you're going to take on a little bit more risk. You're going to have a little bit less return, but you also have a much better probability. Would you agree with that?
Yeah, for sure.
That's the conservative entry on a breakout, is you're going to have less return, more risk, but a higher probability, right? Now, the aggressive entry, take Netflix, for example. The aggressive entry is to get that trigger above the breakout channel before it confirms, so that you get into it upon the confirmation, right? And so here we have a clear level of resistance right here at 360. It is not broken out yet, but we're going to put an order to buy it if it does break out. Now, the only conversation, if you wanted to be more aggressive in Netflix on the breakout, is do you want to use a 10% of the ATR or do you want to use a 50% of the ATR? That's completely up to you. Either one's fine. 10%, 25%, 50%, whatever it is. Now, a lot of times that 50% of the ATR, and I want you to think about this, guys. Resistance, we give resistance a number, right, Tim? We give it a number. Resistance is at 360. But resistance on a stock like Netflix that trades literally $10 a day, it's not 360. It's a zone around 360, right? And a lot of traders would assess that zone to be about 1 ATR total. And so that zone wouldn't be 360, that zone would be 355 by 365 or somewhere in that. So what happens is if you put it in like in a 10% ATR above the resistance, you're still within that zone of resistance. And so you don't have a high probability of it confirming and then running on top of that because it's still within that overall zone of resistance. It's like it ticks up, ticks down, ticks up, ticks down. So you certainly could do a 10% of the ATR above the resistance zone. There's nothing wrong with that. But I like somewhere around a 25 to a 50% of the ATR above that level. That gives me a little bit more confidence that the breakout is legit and I'm not just going to get whipsawed like it was on Intel. Now, by the way, Tim, it would not have mattered on Intel. It would not have mattered if you put a 10% of the ATR, 25% of the ATR, or 50% of the ATR. It would not have mattered. You would have got whipsawed anyways. That's going to happen. So I like using somewhere around 25% of the ATR above the breakout channel. So if my ATR is $10, let's just call it $10, 25% of 10 is $250. I'm going to put that order at $362.50. So I get in at $362.50. Now, whether I do a contingent on an option or just do the stock is up to the trader who's doing it, but it's going to be anywhere between that 10 and 50%. 10%, very aggressive on the entry, has a greater chance of whipsaw. You obviously have less risk there and greater return. A 50% of the ATR, you're going to have a little bit less return. You're going to have a little bit more risk, but you have a much better probability. So I kind of split those mids and just put it at 25%.
Whatever that rule is for a trader, obviously it needs to be specified and written out and understood. Now, once you trigger in, and I love what you're doing here, Matt, especially on these breakouts, you got to identify that zone. It's not just a penny point number because you have to understand the psychology behind it. And I'll tell you, for me, quite frankly, it depends on what time of day on whether or not I'm going to take an aggressive entry. If it's right at the open, breaking 360,
you'll take aggressive.
Ding. Let's go.
You'll pop.
Right. But if it's late in the day, I've got 5 minutes to close and it's just barely poking its head up there, probably not. I'm going to wait. So knowing the
question though, but yes, but that's for you and me who's staring at the market every day,
What you're
all
saying,
day,
everybody else
right?
doesn't stare at this all
I,
day
I,
long?
I'm willing to bet that hashtag Team Tackle doesn't stare at charts all day like you and I do. So what about? And I'm just spitballing here, but I would say, a majority of our community, has responsibilities during the day, and they can't sit there and stare at charts. So you're absolutely right on your trader skill set. But what about that individual who's putting in orders at night, right? You have to
Yeah.
you have to also, understand that you can do that as well. So for example, if I'm, for like, even when I'm speaking, Tim, I still trade during the day, right? I still check
Mhm.
it at lunch, check it in the morning, check it at night, check it during breaks. Every now and then I'll shut my projector down and check it right then, right? If something's happening. So, but let's say I have a job and I have to go to, and I'm a lawyer and I have to go to court today and try and present my case. And, I'm obviously not thinking about the stock market, but you know what? I want to make some money in the stock market too. I want to, put in an order at night, right? To get triggered tomorrow in case I'm not there, right? Well, this is the same techniques that I talked about just barely can be the exact same thing you do at night. The
That's right.
only the only difference, the only difference is instead of just putting a contingent order to buy it at 362.50, or instead of just putting a buy stop at 362.50, what you would do is you would right click, come down to buy custom, and you got that OCO bracket order. Now, what an OCO bracket order is, it allows us to put our entry, our stop, and our target all in the exact same order. And if I click on that and I drop that entry order into what's called a buy stop limit order, and I put my buy stop at that 362.50, and I put my higher limit, I'm just going to do 10% of the ATR above the stop price. 10% of the ATR is $1, so that'd be 363.50. Okay, so all of a sudden I have now bracketed my order in for tomorrow, Tim, that or today, that
Mhm.
if it goes to 362.50 by 363.50 tomorrow, I get triggered in. And I can go down and I could be driving my truck, right? Right, Maria? Or I could be arguing my case, or I could be hanging out with my daughter, or I could be at the beach, or I could be at work, or whatever it is. I don't have to be in front of the market to trade the market and take advantage of everything that we do as traders, and what we do in our community with Tackle. You have to learn how to control entry through orders.
Mhm.
Oh, and by the way, halftime crew, did you guys see Coach Noah's uh, option Greeks? We call it the Spider-Man. It's like 5 YouTube videos back to back to back, like all 4, 5, 6 minutes. Awesome, awesome videos. You guys, if you've not checked out that Spider-Man on the Option Greek series, make sure you go check that out. But we got a new one coming out for you guys, and it's coming out fairly soon. I don't know exactly what the date is, but it's on order entry. Everything we're talking about here, helping you guys out on order entries, they're going to be awesome too.
Yeah. Yeah. Order entry, targeting, stop losses. I mean, these basic mechanics are very important.